Let's bring in Peter Andersen, Chief Investment Officer at Andersen Capital Management. Peter, let me begin with you. Is there any particular market effect that you can discern from the fact that the House has finally been able to get out of its own way and elect a speaker?
There's a lot of boxes we need to check in terms of uncertainty going forward. So this certainly was a box to check. I don't think it's really going to have as much impact as some of the other boxes that we need to check. For instance, higher interest rates, Federal Reserve action, international conflict. But of course, it's better than nothing.
And so if it's better than nothing, Peter, where does it leave you as an investor?
Well, I really, in my investing strategy, it's almost a trivial aspect. I mean, I look at companies that are basically independently operating from all this noise that's going around right now. So even though there's a lot of turbulence in the markets and internationally, if you stick to stocks that you think are immune or mostly immune to all this noise, and I say that respectfully, the noise, then I think you're set for the rest of the year and the year beyond.
Peter, I'm struck by your line here, and I want our viewers to brace themselves, where you say, I love a 5% 10-year. You say rising rates are good for markets. I hope the 10-year goes to 6%. So while people are throwing things at the television as they watch the NASDAQ below the 200-day and the S&P almost back where we were in May, please explain.
Well, Kelly, I wonder if you remember where you were, say, 16 years ago, because that's the last time the 10-year hit a 5% yield. And my thesis is that for the past 16 years, we have been living in la-la land with yields as low as mortgages practically at zero rates. And investors have anchored on the past 16 years rather than looking. Now, 16 years for many people is an entire career so far. But if you look back to the 80s and 90s, you know, we've had the 10-year Treasury peak at 16% back then. So it drives me personally crazy. I throw things at the screen when people are saying higher for longer, and really higher, in my opinion, is not a 6, 7, 8% yield. That's a symbolic of a rationally operating economy. So when the 10-year reaches 5, 6%, to me, I'm thinking that now we're coming back to a more normally operating economy.